Hey, it's Mack with PriceActionTradingSystem.com, and it is Thursday. It's October the 6th. This will be our chart lesson for the day, and this is going to wrap our week up. No chart lessons on Fridays these days. Um, Also, Monday is Columbus Day. I did look at the trading schedule, and trading hours are normal. The market won't close early. However, if the banks are closed, and most of your federal offices are closed, generally that's going to, with the banks being closed, it's going to knock out a lot of your traders. So a lot of them will take off. So it could, even though the market's going to trade regular hours, it could be too slow and low volume, may not be worth trading. I will come in regardless. So um, if we have enough volume during the day that it makes it worth having a chart lesson, we will have one. If not, I'll probably take off and go enjoy the day myself with the rest of the traders that aren't trading. So just be aware of that. Not sure what the day will hold. We'll just have to see. But it is regular trading hours, even though it's Columbus Day holiday that day. And generally, I know that a lot of the federal offices are closed on that day. I've been to the post office before on Columbus Day, and it's closed. And I believe that most of the banks are closed. So we'll just have to see. Anyway, just be aware of it. And if there's no volume Monday morning, you'll know why. Today was an interesting day. We traded down. Noticed we had a close outside, moved to a new low. We reversed, and we rallied pretty strongly back up, and then just went flat again. So we closed right in this area, 2154. So yesterday and today we closed maybe up 3 or 4 points top. So not much change for the day, but this is all the movement we need for a pretty good trading day. And if you could catch either one of these moves to the upside, you probably had a runner and nice day. And there were a couple of these, two of these coming down where you probably would have had a runner too. So not as many trades lately, and several of you made a comment yesterday or last couple of days that it's been slow and you've sat on your hands. That is exactly the right thing to do when the market. Sometimes you got to be patient. Like this morning, there wasn't a good trade until after the regular session opening. If you were in here early, there just wasn't much happening. So anyway, I'm going to back out and talk about the trades. We'll wrap up today, and I'm going to wrap up the week. I need to get out of here. This is my birthday time of the year. My son's birthday was a couple of weeks ago. Now my daughter's birthday, and then my wife's and mine are coming up pretty quick too. So the stretch of September, October, and early part of November are really busy for me birthday wise. So my mother's birthday's in there as well. So, but we're gonna have a little birthday dinner tonight, so I need to get out of here. But anyway, um, notice we're working up. We actually have a two-tiered channel working down. You could have had this early. People ask me about how to do these trend lines. You always want to use your first two swings off the low or the first two swings off the bottom. In this case, there's your first two swings off the high. On this one coming back up, there's your first two swings off the low. And generally, a lot of times your high will start at the very high and work, but I generally like to use the closes, and they'll hold prices better. And you can see right there, I came off those first few closes right there, and that gives you the trend line all the way up. Turns out, at first I thought this was the upper side, and turns out it's just two-tiered, and either that or we overshot it, whichever. It looks like two-tiered to me. Notice the gap right there that we cut through. I don't understand why exactly, but these gaps, basically what it is you can count these gaps as a new low here and a new high here. They work exactly the same. And that's one of the conclusions I've come to after studying these for a lot of years. They tend to act like pivot points, just like a new low or a new high, even though it just keeps going. So keep that in mind when you're thinking about them, and you'll notice them show up quite often where a trend line is or where a midline is or that type of thing. So I hope that's clear. I can't tell you much more about them than that. Just watch for them. That's the main thing I can tell you about them. So anyway, we're working down, anyway, the trend lines always start off your first two swings. Occasionally, like right here, really, when we came back down and made this new low, you really could have started another trend line right here, and you'll say why. Well, really, this is a double bottom, so this is just like a new low right here. Same thing. Right here, here's your first couple of swings and bars off of this side. And it's fitting real nicely along the bottom until you get an overshoot, and then that leads to a break, a new low, and then we get a break of the main trend line, a new low, and we take off. So just keep that in mind. The main idea is you want your trend lines and your trend channels to fit real neatly, and you see how that's holding prices neatly. When it touches the bottom, it goes to the top. It comes to the bottom, it turns and goes up, and it touches the top, it comes down, and that's what you want to see. If your trend line looks like this at the bottom and you got all this jagged overshoot and it looks like this at the top, then it's not right. Your trend line should hold prices neatly, and there's always this equal distance stuff between the midline, and you can see there's one of those gaps again right there where this midline comes across there, and that tells you that's a pivot point. So there it is, and I didn't notice that one until just now. I just happened to look at it, and there it sits right in the middle. That maybe help you adjust your midline a little bit. So there's two examples of it on the midline, and there's one on the way up. And you can see that midline affecting prices on both sides. There's a little gap right there near it. Another one. So just keep that in mind and understand that your trend lines always start, and your midline has to be equal distance. In other words, it has to be an equal distance between this point and this point. You measure that, and then it has to be an equal distance from this point to your other side. And if it's not, then something's probably not right. I've seen people come in their midline. Oops, didn't mean to do that. Oh, I hate when I do that. All right, I got it back where it goes. I'm gonna extend it some so I don't do that again. But one of these days I'll get it. But yeah, if your midline's right here, even though it looks like it's holding something right there, that's wrong. It could be, actually on this one, this could be the midline, and this may be the lower channel, and you might have had an overshoot here. So that's something to think about. But I think you get this to the same place right here either way, the way I just originally had it. It's a little lower. And that accounts for that overshoot now. And you can see it holding right here. Bounces twice off of it. So yeah, anyway, this midline should be an equal distance. If you got this one down here trying to look at it like that, then it's not right. It has to be equal distance between your lower line and your upper line. So keep that in mind too. But I've already spent 8 minutes. We haven't even got to the chart lesson. Of course, it'll be pretty quick because there's not a lot of trades. But anyway, we're working down in a major two-tiered channel. That's a pretty obvious trend line, whether you know where the midline or the bottom line is or not. That's an obvious trend line. Look how it turns prices there. Look how it turns that bar every time. It's obvious that's a correct trend line. And so we come back. There's actually a confirmation of it there. You got two swings and then a pullback and a confirmation, and look how prices, that's where all your best trades always originate from, is your key entry point, which is your trend lines. And look what happens when you get back to it again. You get another big move down, and it's probably an equal, I never measured it, but there's your first move down, and there's your second move, and your final low comes to almost a perfect equal distance move. But I would also measure this from here, because that's really where the downtrend started, to there, and then bring this over here, and you can see that's another perfect measured move. I can show you this stuff over and over. Is it 100%? No, but it's probably 75 or 80%, and that's all you need is a little bit of a edge, and 25% edge over 50% is pretty doggone good, especially when it comes to trading. So keep that in mind. But anyway, we had a channel working up here. We got a close outside. We tried to go up a couple times. This was really tempting to go short here, but We haven't made a new high. We're not back to the trend line. I definitely wouldn't go short there because look what happens. You get trapped, you get stopped out, and then it goes exactly where you think it's going to go. So you got to be really careful going short there. Um, and we're really, look how flat the EMA is starting to get there. So, but all of a sudden it ticks up and does make a new high. Notice how this high is higher than that one. So now you got a break and a new high, and it's right off the key entry point. Go short. It's a second entry too because that is there's a lower low there, and so you notice how you get one leg up correction, second leg up, go short right there. It's a failed break higher. It's a second entry short. It's off the key entry point. It's a failed break up. There's just lots of different reasons. You may have been out by here, but if not, when it comes back, I like adding on here. This is a little, notice this is all that support is kind of like a little breakout pullback short. Just another test of that trend line just to verify it and look at it go, boom. And I showed you how to get your measured move. That would have led you to exit right there on the first one, and it bounces. But anyway, we're moving down, and you got this trend line working down. You get a close outside. You tried to go higher twice here. The only reason this one is green and not red is because you're going sideways. You got three or more bars stacked up. They got stem on both sides. We're not quite back to the trend line, and so it's a little risky going short there yet. Because it could do just like it did over here and push back up one more time and get you. But we do have a new high in place on this one. You got a little trend line. I don't have this one on there, but this little thing's working up right there. Notice how I'm using the closes right there. And then you get a break outside and you get a move to a new high. And this is a double top here after a two test. So that one, there's reasons to like it. It's a little more aggressive because you're not back to the trend line though. So that's the only reason it's green, and it is real close to being red. But you move down, and notice how we're kind of going sideways. You got a little support. Good. Originally I had it right here, and after it moved down, I moved it. It still really looks like it fits better over here off those first closes, so you could move it back. But then you're correcting here, and you finally get a close outside the bigger two-tier channel. But look how this little channel is holding. So wait for a break, move to a new high, and then generally you want to wait for a lower high. You might have considered this one right here, but it's right back into support. It's fairly bearish. It would have worked. You know, you could probably argue for it to be green, because we do have a new high in place, and if you're wanting to be aggressive, you know, sometimes you want to take those. Really, this would be your signal bar. That's another reason I didn't like this one, because this is truly your signal bar, and it's too bullish. But you got this one right here, but your stop would still have to go above the swing high right there. And so you might consider that one, but you still wouldn't have triggered till here, where you've already. And now you've got a lower high here and another bearish bar. So really this trade works out the same either way. You can't go short below that bullish bar. So it never would have really triggered off this bar until here. And then you've got another reason to enter. So it gets just enough to get you out, and it bounces. It comes back. Again, you don't have a very good signal bar here. It's the only reason I don't like this one. And at this point, notice how we made a little lower high. I would have moved this down. Fits better right across there now. Your range has gotten a little bit bigger, basically. But yeah, I don't like the signal bar here, but it is a double test of this high. It is a failed second. Notice that's a new high, first entry, pullback, second entry. Treat that like it's a failed break above those double matching bars there. Triple top. There's reasons to go short there. Just make sure you got enough room to get out before you get here. But then it pushes down, pulls back, and gives you a really bearish bar. And I like entering there. Again, make sure you got room to get out here. And man, off it goes here. And there would be a trend line working down through there. You see those closes working right down through there. Notice how I just drew that trend line across those. Of course, it's easier to do it after the fact, but I would have drawn it on those first few bars there. You need about 3 bars minimum to closes, and you would have had all 3 of them right there. And so you would have had that by the time this bar sets up, and you just go short, and notice it works all the way down. And actually, you get a big overshoot because there's the lows, and look how that's holding prices right down through there. And you get an overshoot and then a reversal, and so this is not only a failed break lower, it's an overshoot on the short-term channel. Look how far away we are from the EMA when we've been so close all that time. It's going to come back pretty quick. Really, that one should be green. I like that one. It's aggressive though. So wait on a lower high, which comes here. You still got room to get out. Just make sure you do. You might have to use a limit order there. And you could have gotten filled right at the top of the green there rather than at the top of the stem. And then it's off. If you caught either one of these, it's off to the races. And then it pulls back. This is your reversal pattern. Look how it pushes right through the EMA, pulls back, and this is a failed second entry short. Notice the new low, first entry, second entry. Big bullish bar, go long right there, and it's off to the races again. So if you caught any of these 3, you had a runner. You could have had a runner on this one, and you probably would have had a runner over here too. Not as big as this, but still pretty nice. And then we push up. We get, first it looks like a 2-tiered, and a single tier, but then I think it turns out it's 2-tiered, and you come off the top. And where do you generally go after you're coming off the top? You go the other side. Notice it does push up again, but it can't get to the other side. Its prices are going to work over here. That's tempting to go short, but I wouldn't do it. You never know when this thing bounces again. There's a first entry long here. Again, you're not back to the key entry point, which is this trend line right here, so I would wait. And it finally comes back here and gives you a second entry, but look at that. That's a bearish signal bar, and look what would have happened to you. But then you get the failed second entry short and a nice little bullish bar, and you got room to get out, so now you can go long right there. And that's a quick, easy scalp. It pulls back, and it's obvious now we're going sideways. And it gives you another bar here. Just make sure, again, you got to have room to get out. That's the reason this one's green. If you went on with a stop right there, you wouldn't be able to get out. You could let it break higher and drop and get back here far enough to where you got room to get out before those highs. But if not, I wouldn't enter that trade. It would have worked because it pushed on up, but look how long it took, and you got to sit there and ride that out, and it's really not worth it. And then that was it for the day. Well, there weren't any more. You're just too right across the middle here. It's not enough room. It's too risky that late in the day, and so I wouldn't check anything. And then, of course, once you get into the gray there, you're after 2 o'clock, which is after our cutoff time. So yeah, that was it today. Not a lot of trades, but there's a few fairly easy ones to see that worked pretty well. You only needed a couple of trades. You only need a couple, 3 trades, depending on what your goal is. And the key is, I probably don't say this enough, is not to take more trades if you want to make more money. The key is to still learn to spot the best 2 or 3 trades and kind of work up on your leverage. Just remember that as you increase your leverage, it will increase your the mental aspect of it, and that's the key. It takes a long time to build up. You may think that you can trade, if you can trade 1 or 2 contracts and make money, I can trade 100, but I promise you it won't be the case, because when you got that much money riding on the line and it starts going against you a couple of ticks, you start getting nervous and you start making mistakes. So just remember, if you do try to build your leverage, do it very slowly. Once you can do 2, then maybe you add 3. And just because you can do 3 doesn't mean you automatically jump to 4. You might stick to 3 long enough till you get used to seeing that kind of leverage, because every time you add another contract, each tick starts to work against you considerably more than when you're only trading 1 or 2. So when you go from 1 or 2 to 20, I mean, it can back up 3 or 4 ticks, and you're looking at a big hit if it keeps going. and that will make you extremely nervous, and that will mess with your psyche, and mess with you mentally, and you'll start making mistakes. So just keep that in mind. But anyway, that was it for today. I'm going to wrap it up. We'll be back to do it again Monday, assuming that there's enough volume and everything works out okay Monday. Otherwise, if there's not enough volume and there's not anything worth talking about, I probably won't do a chart lesson. I'll probably get up and leave the office early. So anyway, maybe I'll see you Monday. If not, definitely on Tuesday. Hope you have a great weekend. Hope you have a good trading day tomorrow to wrap up the week. We'll be back again to do it Monday or Tuesday. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.